All right, Tom, bonus depreciation. My understanding of it is the ability for us to deduct a whole crap load of something we buy for the business in year one. The way it used to be up until recently was over time. So if you spent 100 grand, you could depreciate it over so much time. But now it's like a large portion of that goes boom right in the first year. Is that kind of a correct summary?
I think that's a great way to put it. It's, we used to have, we think of it as a net income tax. It's actually a consumption tax now because it's only the amount that you actually consume that is taxable. So if you don't consume it, if you actually put it back into the business, you're going to get a deduction for it. And it doesn't matter anymore. It used to matter whether what the money was spent on. Was it spent on an expense that was, you're going to use in the next 5 days, or was it spent on something that you're going to use over the next 5 years? Now something you're going to use over the next 5 years gets just as much of a deduction as something you're going to use over the next 5 days. So whether you spend it on, that meal that we're talking about that you're going to use immediately, or whether you spend it on a car, which you're going to use over the next 5 years, doesn't matter. You spend it on equipment, that the microphone you're talking into, that's deductible. The desk that you have, that's deductible. And what's really interesting is they changed the bonus depreciation rules. Not only is it now 100% deductible the first year, but even used equipment is deductible the first year. So it doesn't have to be brand new. It used to have to be brand new. And then we have this whole 179. A lot of people have heard of 179. We don't even bother with 179 anymore because bonus depreciation is so much better than this Section 179 deduction. So for the next few years, at least until 2023, we have bonus depreciation at 100%. So that means that anything you put into your business, you can, a lot of your, let's say you remodel your office, a lot of that is going to be deductible. Not all of it, but a lot of it's going to be deductible. You could go buy, Anik, you were saying that you were down at Brad Sumrock's event and you're looking at multifamily housing. Well, multifamily housing, normally that's used property, right? You're not going to go build a brand new apartment building. So you're going to take, well, when you buy a piece of property, you're actually buying 4 different things. You're buying the land and the building, but you're also buying the land improvements, all the landscaping, the outdoor lighting, the infrastructure, all of that kind of stuff, and you're buying the contents of the building. Well, the contents of the building and the land improvements are all subject to bonus depreciation. So let's say you buy $1 million building. This math is phenomenal. You buy $1 million building. You put down $250,000 on $1 million building. You're not going to put down more than $250,000. Okay, so you invest $250,000. Your first year deduction is going to be somewhere between $250,000 and $300,000 on that $250,000 investment.
It's kind of like a free building.
It is. It's like I'm getting this huge deduction for something that's going to last for the next 40 years. That is a screaming deal. Okay, and so I'm not here to say I don't want to pay taxes or I do want to pay taxes. I'm just telling you that if you understand the tax law, for an entrepreneur, there's no reason to be paying high taxes. It's just, you're just not understanding the tax law if you're paying high taxes.
And it's funny, right? Because last year, 2018, was the year I built the Learn Center. So we invested a ton of money in video equipment, AV equipment, desks, and I don't know what else we did. And there was a conversation happening at the end of last year because we got to figure out okay, any tax strategies needed in 2018 to eliminate taxes. I remember I called Tom and he was like, we don't even need to talk. I'm like, why? He's like, because there's no way you're paying taxes with bonus depreciation and the fact that you just built this center with all the stuff you bought. I mean, there's going to be carry forward probably losses because it's just the way that. So, and you know what? That was helpful It was super helpful. It gave me more net income at the end to be able to continue to invest in the center, and it encouraged me to freaking build this place. Like it is actually helpful. In the example Tom gave of buying the building, someone may say that's ridiculous. You write off the whole thing. A rich person who has $1 million, who has that much money to even buy the, well, you just bought a building that maybe has 10, 20, 30 units. You're providing housing for people. That's going to increase the real estate taxes. It's going to increase the value of the area, the economy of the area. Like, that's far, far more impact than a one-time tax you would have paid for the building.
Thanks for listening to The Fighting Entrepreneur with your host, Anik Singal.